Hello, esteemed business leaders, tax professionals, compliance officers, and ambitious entrepreneurs. Are you ready to elevate your expertise in transfer pricing and ensure your business stays compliant and competitive in Nigeria's evolving markets? I am Olatunji Abdulrazak, the founder of TaxMobile.online and managing partner CEO of Hailway Professional Services. I'm excited to invite you to our exclusive 25 sessions transfer pricing masterclass in Nigeria. In today's interconnected world, transfer pricing isn't just about compliance, it's a critical component of strategic tax planning and risk management. Correctly pricing transactions between related parties can significantly impact a company's financial health and regulatory standing. This masterclass will give you the tools to confidently navigate these challenges, ensuring you are fully compliant with both local and global transfer pricing regulation. Everyone, today we will be delving into one of the most significant concepts in international tax practice, which is transfer pricing. I will walk you through the basics, importance, global perspectives, and the specific regulatory environment we operate in here in Nigeria. We will also cover some of the challenges that arise in practice and the gaps that still exist in the current framework. By the end of this session, you should have a clear understanding of what transfer pricing is, why it matters, and how it impacts multinational enterprises operating within Nigeria and globally. So here is Module 1, Introduction to Transfer Pricing. Let us start with a straightforward definition. Transfer pricing refers to the pricing of goods, services, intellectual property, or any other assets exchanged between different divisions or subsidiaries of the same company, especially when these transactions cross international borders. Now, why is this important? 1. Compliance with tax laws. Transfer pricing regulations ensure that transactions between related parties are done at arm's length. In simpler terms, it means these transactions should be priced as if they were happening between unrelated independent companies. And this ensures tax fairness and prevents tax evasion. 2. Fair tax-based allocation. It ensures profits are appropriately allocated to the jurisdictions where the actual value is created. For instance, if you generate profit in Nigeria, the Nigeria government should collect its fair share of taxes. 3. Avoidance of double taxation. Proper transfer pricing ensures that profits aren't taxed twice in different countries, a common issue when countries have overlapping tax claims. 4. Regulatory scrutiny. Global tax authorities are on high alert, watching out for profit shifting, where multinational enterprises try to reduce their tax bills by moving profits to low tax jurisdictions. Now, let's look at the final one, financial reporting accuracy. By following transfer pricing rules, companies ensure their financial statements accurately reflect the economic realities of their global operations. So let's look at a case study now. Let me give you an example to clarify this. XYZ Corporation, a multinational company, operates in country A, which has a 30% corporate tax rate, and country B with a 10% tax rate. The subsidiary in country A manufactures goods and sells them to the subsidiary in country B. Now, if XYZ Corporation sets an artificially low transfer price for those goods, it shifts profit to the low tax jurisdiction reducing its overall tax bill. However, to comply with transfer pricing regulations, XYZ must set a fair arm's length price for these transactions, ensuring profits in both countries reflect the real value created in each jurisdiction. Now, let's look at global perspective on transfer pricing. Transfer pricing doesn't exist in isolation. It's part of the global tax environment, and several global initiatives shape its implementation. Now, let's look at the OECD guideline. The Organization for Economic Cooperation and Development has developed a comprehensive framework known as the OECD Transfer Pricing Guidelines. These guidelines serves as the global standard and are the foundation upon which many countries, including Nigeria, have built their transfer pricing rules. On BEPS projects in recent years, the OECD and the G20 launched the Base Erosion and Profit Shifting projects. This initiative specifically target tax avoidance strategies that multinational enterprises use to shift profit to low tax countries. Actions 8 to 10 of the BEPS project deal with transfer pricing, ensuring that profit allocation aligns with value creation. Now let's move to the country-specific regulations. Countries have adopted transfer pricing regulations based on the OECD guidelines, but tailored to local circumstances. For example, United States uses Section 482 of the Internal Revenue Code to manage transfer pricing. India also has some of the strictest transfer pricing documentation rules globally. China focuses heavily on location-specific advantages in its transfer pricing rules. So let's look at another case study. One of the most publicized cases of transfer pricing involved Apple Incorporated in Ireland. Apple faced scrutiny for negotiating a tax deal with the Irish government, which allowed the company to significantly lower its tax liability. Now, the European Commission later ruled that Apple owed 13 billion euros in back taxes, demonstrating the global emphasis on compliance and fair taxation in transfer pricing. Now, let's look at the historical background of transfer pricing in Nigeria, starting with the early development. In Nigeria, the transfer pricing journey started relatively late compared to global trends before the 2000s. Nigeria lacked specific transfer pricing regulations, which meant there was potential for tax-based erosion as multinational enterprises could manipulate prices between related parties. Let's go to the regulatory framework. The turning point came in 2012 with the introduction of Nigeria's first income tax transfer pricing regulation. This aligned the country's TP rules with the OECD arm's length principle, requiring multinational enterprises to ensure that their related party transactions were priced fairly. Now let's look at the key milestone that have gone through under these developments. In 2012, introduction of the first comprehensive transfer pricing regulations were introduced. 2014, introduction of transfer pricing declaration and disclosure forms for transparency and compliance. In 2018, update of the regulation to reflect the OECD BEPS action 8 to 10 and introduce country by country rules. So in 2018, there was a revised income transfer pricing regulation in Nigeria. Now, let's use another example, a case study. So let's consider a local example. ABC Group, a Nigerian conglomerate with subsidiaries in sectors like manufacturing and telecommunication. When the TP regulations were introduced, ABC Group initially faced challenges in ensuring its intercompany transactions comply with the Federal Inland Revenue Service guidelines. By engaging with tax experts and implementing solid documentation practices, the group was able to comply, avoid penalties, and ensure profits were accurately allocated. Now, let's look at the conclusion aspect of this introduction. Transfer pricing is not just about following rules. It is about ensuring that companies operate fairly, contribute their share of taxes to the countries where they create value, and avoid double taxation. Globally, the OECD guidelines and the BEPS project have reshaped how countries approach transfer pricing. In Nigeria, the evolution of transfer pricing regulations reflects the country's commitment to curbing tax-based erosion and ensuring fair taxation. However, as we have seen, gaps remain in the implementation of these rules. These gaps create uncertainty for taxpayers and challenges for tax consultants or transfer pricing experts. There is a need for clearer guidance and ongoing dialogue between regulators and stakeholders to ensure a fairer and more transparent tax system. Thank you very much for your attention. Let us meet your facilitator. Olatunji Abdulrazak, founder of taxmobile.online and managing partner CEO of AOA Professional Services, brings over 20 years of experience in tax advisory, regulatory services, and transfer pricing. He has held senior roles in various organizations, including Director of Tax and Regulatory Services at Norlands Nigeria Professional Services, Senior Manager, Tax, Regulatory and Advisory Services at Saffron Professional Services, Tax and Fiscal Reporting Accountant at Schlumberger Nigeria Limited, Audit Training at Ernst & Young. His expertise spans internal audit and control, transfer pricing, arbitration, tax advisory, audit support, forensic investigation, and due diligence. Olatunji holds a BSc in accounting from the University of Ado-Ekiti, now Ekiti State University Ado-Ekiti, an advanced diploma in transfer pricing from Thomas Jefferson School of Law, San Diego, USA, and a certificate in International Financial Reporting, ACCA. Olatunji is affiliated with several professional organizations, including Association of National Accountants of Nigeria, ANAN, Chartered Institute of Taxation of Nigeria, Chartered Institute of Public Finance and Accountancy UK, Chartered Institute of Arbitrators UK, Certified Fraud Examiners, Australian Tax Institute, International Fiscal Association. Olatunji has authored several influential publications on VAT and transfer pricing, which include VAT in the oil and gas sector in Nigeria, published in International VAT Monitor, New Transfer Pricing Regulations, Prospects and Challenges, published in International Transfer Pricing Journal, VAT and the Financial Services Sector in Nigeria, published in International VAT Monitor, Transfer Pricing Regulations and Audit in Nigeria, published online by Transfer Pricing Inside Africa. This article also featured at the Transfer Pricing Minds Africa Conference, Cape Town, in November 2015. Effect of the OECD BEPS initiative on Nigerian transfer pricing regulations, published in International Transfer Pricing Journal. Transfer Pricing Regulations 2018 and Guidelines for Country-by-Country Reporting in Nigeria, published in International Transfer Pricing Journal. Transfer Pricing, Recent Developments and Overview of Digital Taxation in Africa, published in International Transfer Pricing Journal. All these articles were published by International Bureau for Fiscal Documentation (IBFD) in Netherlands. So now let us look at the masterclass. Now we will be looking at all the following sessions: Introduction to Transfer Pricing, Regulatory Framework and Compliance, Fundamental Principles of Transfer Pricing Methods, Transfer Pricing Documentation, Conducting a Comparability Analysis, Advanced Pricing Agreements, Transfer Pricing Audit and Dispute Resolution, Transfer Pricing Risk Management, Transfer Pricing in Specific Industries, International Perspectives of Transfer Pricing, Transfer Pricing and Tax Planning, Economic Analysis in Transfer Pricing and Customs Valuation, Transfer Pricing and Indirect Taxes, Transfer Pricing and Permanent Establishments, Corporate Governance and Transfer Pricing, Technology and Transfer Pricing, Economic Substance and Transfer Pricing for Intra-Group Services, Transfer Pricing for Intangibles, Transfer Pricing for Research and Development, Transfer Pricing in Joint Ventures, Transfer Pricing in Mergers and Acquisitions, Future Trends in Transfer Pricing. When you join this masterclass, you will get insights directly from the wealth of research and hands-on experience. Thank you